17 mind-blowing hacks to use in the worst recession ever. Most of us need to spend less and save more, and that's especially true during a recession when you might be unemployed, underemployed, or worried about losing your job. Here are 17 mind-blowing hacks to use in the worst recession ever. If you can put a few of them to work, you may save hundreds of dollars each year, and putting a bunch of them to work might net you thousands of dollars annually. So which ones make sense for you given your needs, abilities, or interests? And once you've got more money on your hands and a stocked emergency fund, consider investing some of your extra dollars for your future. Number 1. Monitor the risk. Do you have access to a regular income? If yes, what are the risk factors that may affect its regularity? The recession will impact different sectors in different ways, so you must gauge the risks to your regular income accordingly. A lot depends on the firm you work for and the demand for its goods and services. A sudden and drastic cut down in the demand for the products of your firm might result in your job loss, which is why you must be now careful about your job. Number 2. Avoid switching jobs. Do not take the risk of looking for new jobs or agreeing to take up new roles in other organizations. If you're unsure of your job security, look for alternative income sources too. These small additional income sources will help pay for essential commodities whose prices can go up drastically during this season. Number 3. Check your savings. Inadequate savings often force people to chase high returns. They make not one but two mistakes of saving less and risking more. During this recession, ensure that you have enough cash in hand and at the bank to meet unforeseen expenses. Number 4. Get an emergency fund. Do not underestimate the importance of having an emergency fund in place. Remember that emergencies can strike at any time without your calling, so it makes sense to be prepared for them. Number 5. Say no to herd mentality. Avoid herd mentality when it comes to investing. You don't have to follow people rushing to park their earnings in allegedly high-yielding bonds just because they think it's smart investing. This is not the right time to speculate on gold, dollar, or oil, the three pillars that would decide how the economy would progress henceforth. Number 6. Choose stocks wisely. Beware of investing in stocks. There are chances that the market would suddenly shoot up following some positive speculation or news to again drop down. New age investors, without realizing the risks involved, buy when the stocks are at an all-time high, thus forcing them to book losses when the market falls down or wait for the shares to resume growth to their purchase prices. Number 7. Don't go for penny stocks. A common blunder that stock market investors make is buying penny stocks at throwaway prices, hoping that they would benefit from the price rise. This is because weak businesses will suffer more during the recession as opposed to companies with huge market capital. The market rewards only earnings and growth, which is why speculating on such stocks would only backfire. Number 8. Avoid a new business. It is indeed the best feeling to take charge of your business, but not surely the right time to do so. This is not the right time to be an entrepreneur, considering how the demand for goods and services would shrink during the recession. While all businesses, including the profit-making ones, would suffer, new businesses are affected most due to low cash and reserves and the inability to garner enough earnings to sustain their growth. Number 9. No reckless selling. The recession is bound to send shock waves across the economy. You may be in dire need of money to meet your expenses. This may prompt you to sell your stocks in a jiffy. Some even go to the extent of selling off their properties to escape the burden of loan repayment. This selling behavior is bound to trigger extreme monetary losses, as you would be losing from the sale of such assets. Unless you are in dire financial distress, never consider selling off your assets. You must remember that investment is a long-term proposition, which is why you must lend more time to your investments to benefit from the compounding effect. Number 10. Refrain from timing the market. Timing the market is not possible. Investors lose more money in timing the market instead of resorting to a disciplined investing behavior. Moreover, panic causes many people to engage in revenge trading, hoping to recover losses, which never happens. Number 11. No new debt. While planning your finances, you must be aware of the extent of debt or liabilities that you incur. Do not incur new debt. This is because interest rates are slated to rise more in the future, making debts costlier than before. In the event of continued rate hikes, you will have to shell out more money as interest. So put a brake on all those ideas that would require taking up additional loans or opting for new loans. Number 12. Prepay loans. Too much debt may force you to cut back on your savings, which is another sign of impending financial insecurity in the near future. Prepay your loans, if possible, before the next rate hike sweeps the floor from under your feet. Number 13. Look for equities. The recession will have a massive impact on the stock market, which means that we may witness the equity markets plunge due to an all-time low again. While this may be the best time to invest in equities for those with a long-term investment horizon, not all may consider following this proposal. Number 14. Short-term debt. Short-term debt funds, including liquid funds, are the best option that you want to fall back on in case you are in imminent need of cash. This is because you can seek immediate redemption of these funds with the money being credited to your account within a few hours. Number 15. Cut down your expenses. This is not the right time to be reckless with your spending. Cut down on your lifestyle expenses, put your travel plans on hold. Do not spend on unnecessary things. There is a fear of prolonged recession this time, thus leaving you with not enough money to meet your necessary expenses. Things are set to get costly. Try to make do with whatever little you have instead of extending yourself to meet unwarranted expenses. It's natural for most households to cut back on unwanted expenses, thus making them less prone to income risks and interest rate hikes. Number 16. Secure your savings. It's a good feeling to have enough money in hand. However, this does not warrant you to have a laid-back approach in your intent to earn and spend. Recession is a time when you must protect what you have. Number 17. Check investments. Furthermore, you must not spend unnecessarily to protect your wealth from being eroded. If you have been yearning to invest your hard-earned money, then take a pause and check your investment horizon. Those intending to hold investments for a prolonged period of up to 5 years and more may invest in equities, sovereign gold bonds, gold mutual funds, silver exchange traded funds, secured bonds, and stocks of fundamentally strong companies. This brings us to the end of our video on 17 little-known techniques to stay ahead in the major recession. We hope you found these strategies valuable and that they help you navigate through these challenging times. Remember, a recession is not the end. It can be an opportunity for growth and innovation. Let us know your views in the comments section, and don't forget to show your support by engaging with the video and sharing it with others. For more such content, do subscribe to our channel.